Marvell Technology stock has gotten the attention of investors given the rise in effectiveness of artificial intelligence and how Marvell Technology will benefit as a result of that trend. So in this video, I'll answer where I think Marvell Technology stock could be by the end of this year.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Of course, to make that stock price prediction for Marvell stock, I'm going to need a few estimates, assumptions, and numbers. One of which is its forward price to earnings ratio, which as of this recording is 26.26. Another number I'm going to need is Marvell Technology's current stock price at $65 per share. You can see it's still below its 5-year high of over $80 per share reached in late 2021. I'm also going to need Marvell's next year earnings per share forecast. So the analysts on Wall Street that are following Marvell Technology stock, they estimate that it could deliver $2.39 in earnings per share in 2026. Now, this is Marvell Technology's fiscal year 2026. For calendar year, that would be 2025. So when I'm making a stock price prediction for 2024, using the forward price to earnings ratio, I need the 1 year ahead earnings per share, which in this case is the $2.39 number. I know it gets confusing with calendar year and fiscal year. It's something annoying that companies are allowed to do. Companies are allowed to have fiscal years that are different than calendar years, and that causes a lot of confusion and it makes it difficult to make like-for-like comparisons. Nevertheless, it is what it is. We just go along with it and deal with what we have at our disposal. So now that we have these numbers, we can begin to make our estimates for where Marvell stock price could be by the end of the year. So if earnings per share does indeed progress to be on pace for $2.39 for 2025, and the price to earnings ratio stays the same at 26.26, then Marvell stock price could be $62.76, which, if you noticed earlier, that would be below where it's currently trading at right now at $65 per share. So in order for Marvell Technology's stock price to increase by the end of the year, one of those two things has to improve, either the price to earnings ratio or the earnings per share estimate, the earnings per share progress. So which one will it be? Well, if the price to earnings ratio rises to 30, the stock price will rise to $71.70, which would be a nice improvement from where it's at now, roughly 10% gain by the end of the year. If the PE ratio were to increase to 40, then the stock price could rise to $95.60, which would be a significant increase from where it is today, nearly 50% higher, and it's a scenario that I feel is unlikely. What if the price to earnings ratio were to decrease instead of increase? What if it were to fall to 20? Well, that could cause the stock price to decrease to $47.80, which would be a meaningful decrease from where it's at today. But the stock has been lower in the last year, so that's not a zero chance probability, but I also don't think it's very likely either. So where do I think is Marvell Technology's stock price going to end up by the end of the year? I think it's going to be a mix of an increase in earnings per share and an increase in the PE ratio. If I show you its earnings per share outlook for next year, you can see it started out at $2.79 90 days ago, and those forecasts were lowered to $2.39 as of this recording. So the earnings per share outlook has decreased meaningfully in the last 90 days. I think that will be revised upward over the next 30 and 60 days, given the fact that in the first 3 months, the macroeconomic data that's been coming in has been better than expected. And my GDP outlook for the rest of the year is better than expected. I came into the year thinking GDP was going to increase by around 1%. I've upgraded that outlook to closer to 1.4%, 1.25% to 1.4%, given all the data that's come in, given the strong job numbers, given the strong consumer spending. I feel the economy is resilient, so I think that's going to drive increase in economic activity, which is going to help Marvell Technology stock and which is going to help Marvell Technology's business, because remember, the AI part of its business is doing very well. It's the other segments of the business that's not doing very well. And right now, enterprises are shifting spending rather than increasing spending, right? Enterprises, you've been hearing, they're all investing in artificial intelligence. Everybody wants NVIDIA's chips, right? But they're not increasing their spending to get NVIDIA's chips. What I'm seeing most businesses do is switch spending, right? Move spending from one category to another, take spending away from certain areas so that they will have money to spend on artificial intelligence. One area I've seen companies cut back on is data storage. One policy I've seen happen at larger companies is instead of keeping 7 years of data, 7 years of past data, they've been reducing that, right? Keeping only 5 years of data. They said that extra 2 years of data is costing us more than it's helping us. So let's get rid of that. So that saves them on their data expenses, data storage, data management, all of that. And they're using that incremental money to allocate more to AI spending. So that's just one little example of how enterprises are thinking about this investment in AI. They're not just adding more money, they're taking money away from other categories to bring more money to AI. So my estimate for where I think Marvell stock price will be by the end of the year is somewhere in the range of $68 per share to $76 per share. 68 to 76. Now that's not much upside from where it is today. At the midpoint, that would be an upside of, let's say, $7 or 10% from where it is today. Not very much upside from where Marvell stock is, but also the downside is not very low either. Given its PE ratio of 26.26, I don't think the stock price will fall below a price to earnings of 20. So $47.80 on the downside is just about where it could go on a falling PE. Now, if the earnings per share continues to get decreased and continues to get underwhelming performance and continues to disappoint, then the stock price could fall even further. I'm estimating that the earnings per share is going to hold steady here. I'm not estimating further decreases in the earnings per share outlook for Marvell Technology stock, given all the significant decreases in the last 90 days already. So I'm assuming that stays relatively flat, and then the improvements will come either from an upside in earnings per share or an upside in the price to earnings, or a combination of both, a slight increase in the PE and a slight increase in the EPS to go to increase the stock price by roughly 10% for the rest of the year. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.